Alright, hello everybody, welcome back to another video. I hope everybody's having an amazing day. Today we are going to be going over the best day trading strategy that allows you to risk a little to make a lot of money. Where you could put a little bit in the market and get the most out, so you're not very exposed, a little bit of risk. This week I've had a lot of success with this. I've absolutely crushed it. It's one of the most consistent strategies that I've ever seen, and I wanted to share it with you all. So before we do get started though, I want to ask everybody to subscribe if you haven't subscribed already. This allows me to reach more people and share what I love doing with more people, and I work hard on these videos and more people can appreciate it. So thank you. Alright, so what does the best day trading strategy consist of? I'm going to give you guys a little overview with everything over here, and then we're going to go over some examples, and then we're going to talk about how the market has treated the strategy today. So without further ado, let's get right into it. Alright, so the best day trading strategy consists of the 11, 21, and 31 EMA, the support and resistance, and a set of rules that I have. I've included just a few of them over here. We're going to go over all these, and then I have a whole list of them, and that's going to be for a separate video. So let's start with, the 11, 21, and 31 EMA. So with the 11, 21, and 31 EMA, what they do is they take the X amount of days and average the price and show them on the chart as a line, and this essentially shows us it's like a moving support level, where if price touches it, it shows that there's strength at that level, that where over time in the past 11, 21, or 31 days, price has actually shown strength in these levels, and where you could trust it where it'll move up or down depending on what side of the bands we're on. I'll go over all that in more depth, but with these, there are 4 things you want to focus on. You want to buy the retest, like the little taps, which I will call them, sell when they're overextended, check all the time frames, preferably the bigger ones too, to make sure you don't get screwed over, and a bearish retest means you're out. So these are the 4 main rules you have to follow. Let's look at Arrow for an example. Alright, so this is just the past week, just the past 10-15 days, and we're gonna see, if we were to use it, which I did, but how would we have made money? So over here, we see that Arrow flipped. Now, when I say flipped, I mean that the 11 became higher than the 21, and the 21 became higher than the 31 when they were all moving lower before. So we see over here that the 11, 21, and 31 EMAs, as I'm going to call them, they all were moving down, and they were all being sort of negative, where price would go up to them and they would be sent right back down. But it is at this point right here where they flipped, where the 11 was higher than 21, 21 higher than 31, and price uses it as a launch pad. Right? I'm going to call them launch pad setups. So quickly delete this. We see price move up, and we get a retest right here. Now this retest shows that price broke the negative trend and retested this strong support level, these EMA levels, which are levels of confidence, which you could buy with. So you would take this, you would get a little buy right there. I'll make that green. Right? Now, however, how do we know when things get too overextended? My rule of thumb is when price gets too hyperextended from the 21 EMA. That's this blue one right here. The white one is this. This is the 31. When it gets too far away from this 21 line, you want to start selling gradually, not all at once. So we see right here that price really got hyperextended away from the 21 EMA, roughly right about here. Using this method, you're never going to catch, or almost never going to catch, the absolute top. But that's never your goal. Your goal is to make money, right? So with this method, you would have made a quick, easy, roughly 38%. Now, the reason I say 38% is because you see this big gap between price and the 31 EMA. When price is moving up, you're not going to be selling. But we see at this point that price is moving up, 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 up. And then sellers push it back down right before it's about to close. That's a sign of weakness, and we would have sold right here. That's an easy 40% over the course of, a day. You would have bought it at roughly 12, and you sell it at 4. You would sell it roughly around 4 a.m., 5 a.m. That's like 24 hours, 26 hours. easy. 16 hours, I'm sorry, right? That's the kind of setups we want to do, where we buy it and we sell it in the same day or the same few days. That's what day trading is. All right, moving on. Let me do this. Right? Now, we come back down and we get a retest. Now, this retest is strong because we still have the 11, 21, and 31 are still in sequential order. The 11 above the 21, 21 above the 31. So there is no sign of weakness yet. You would have copped a quick buy right here. Now, of course, it did go lower. But again, we're still golden at this point because we did not break this trend line. We did not close and retest it and move back down. Nothing was insinuating that we are going to be moving lower according to this method, right? So at this one, we would have caught the quick buy, and you would have sold it when price got overextended. Now price is not overextended yet, not overextended yet, not overextended yet. Boom, right here. Price is overextended. We see that we have a big gap between price and the 21 moving average on this bar right here. Now, of course, you're not going to be catching the absolute top. You're not going to be catching this tippy top right here, right? You would have likely sold it roughly right about here. When price got overextended and we're still moving up a little bit, this is where you would have sold. Based on that, you would have caught 25% almost over the course of maybe a day. These are the kind of setups we're looking for, and these are just two examples. We're going to be going over more later on in the video too. But going back to this, right, we see that this is the way we want to do it. We want to buy the taps, buy the retests. Every single time we got a tippy tap. You want to buy those because those are levels of support for us. Now, I want to focus on check all time frames for a minute because let's say on the 1 hour time frame, everything's looking amazing. We have the 11, 21, 31 in order. We're getting multiple taps. We're moving up. Everything's going great. But on the 4 hour or the daily chart, we see price starting to slip, where it's starting to curve back down. It's concave down. 11 starting to slip below 21. We're showing signs of weakness. Whether that be a bearish candle, resistance level. It could be anything. If we didn't check that level, we would have bought it and we would have gotten screwed over because almost always the higher time frame supersedes the lower one. Where if you see an amazing setup on the 1 hour, but then on the daily you see a negative sign, most likely price is going to go down. It's going to follow the hierarchy. I think of it like water pouring down the stairs. Whatever happens at the top, the highest time frame, is going to spill down to the lower time frame. But all right, moving on. Support and resistances. Now, support and resistances are levels where there were arguments, and I'm going to show you examples too, but there are levels where there's a lot of price history, and that gives that level strength, where you can use it as a launch pad or you can use it as something to shoot it down. We're going to actually use arrow again. We're going to move over here, and this is a little bit older, it's maybe a month ago. So, we can identify a resistance level roughly right around here. There are multiple. Now this is a resistance level because multiple times throughout, price got sent back down roughly at it. Just because it doesn't touch it doesn't mean it's not part of the resistance level, because this isn't really a resistance level, it's a resistance range, where it could be a few percentage points higher, few percentage points lower. We have arguments over here too. Our support level would be, there are multiple here as well. This could be a support level. This could be a support level. And there's so many throughout this. There's a resistance level right here. Turn support. There are so many, and we're gonna navigate how to trade these. So, let's start with the most obvious. Let's start with the two biggest ones. Just delete this right here. Right. All right. So we see price. We get a retest right here. This is something that we're going to look to buy, because we're at the bottom part of this range, and in the past, we've had multiple taps. We've established this as a base. That's important. It can't be just a new range. Once you've established it as a base, this is where you're looking to buy. Now, you would usually sell when, we're going to take the EMAs off for this actually, just so you get a clearer picture. You would sell this when you reach the top. Now, at this point, we did go lower, And the thing is, if we stopped right here, we closed right here, and we started turning back down, that's when you would sell. You would take a few percentage point loss and just quit it. Cut your losses short. However, it didn't do that. It continued rising. It continued rising. And we reached right here. As soon as it hits this level, we want to be out. Just get out of there, you know? This is not something you want to touch. Over the course of, a few days, which still falls under the day trading category, you made 30%. These are clean setups you want to take. You don't want to be any wishy-washy. You don't want to force any trades either. It's a clean buy and perfect. We're gonna take this all day, every day, right? Now, but don't sell it only when it gets to the top, though. Start selling it gradually. Like at this point, you want to sell some. At this point, you want to sell some. At this point, you want to sell some, because let's say it's, for example, this, right? You get the perfect buy right here, and we're taking the buy all day, every day. This is an established support level, and we pump up, and then be 4 to 8 hours. If we don't start selling on the way up over here, we would have never reached this resistance level. We would have never been able to sell, and you would have just drawn all the way back down. Eventually, it did go up, of course, but we don't know that. It could have just as easily went back down. So you want to start selling over and over and over and over. That's another easy 20 to 30% that you can get right there. Now, these are clean setups. All day, every day, we're taking these. But, let's make it a little bit more challenging, Like, of course, looking at this example, buy, sell. That easy. You buy close to this one, you sell close to that one. What do we do when we flip it? When we flip the resistance level? We're actually going to move right over here. So, adjust this real quick. So, this point right here used to be a resistance level. Price got rejected from it multiple times, 3-4 times easily. However, we broke above it. We got rejected, we broke through. What does this mean? It means that once we come back down and we establish a base, this is no longer a resistance. It's a support. And it works, it's vice versa, right? It would work the same way if you broke through a support level and retested it. That's a resistance. If you came down here and bounced back up and go back down, that's a resistance level now, no longer support. But in this case, we see that we went out, we broke through over here. Anywhere over here is a golden buy, and you just rip it up. And you would look in the past and see what other resistance levels there were, like right here, and you would sell it accordingly, right here and right here. I just want to show you guys that actually, right, really quickly. So looking back, we had a resistance level right here. We had a resistance level here, and look, these are the two places you wouldn't have caught the maximum high. You wouldn't have caught that maximum high, but you would have caught this sell, you would have caught that sell, And again, this isn't about catching the absolute tops here. It's just about getting as much as you can safely. You don't want to aim for that maximum 50%. Let's say in this example, you want to get that 40%, 45%, get that 30%, because you don't know if it's actually going to go all 50% up. You just want to play it safe. We can't lose our capital here. So that's an example of a support and resistance on the Aerodome chart. Play the retest. Play those tippy taps. The same way you do it on the 1120, 131. You play them here. Don't buy and sell breakouts immediately. I want to quickly touch on that. All right. So, for example, on this chart right here, at this point, once it breaks through, that does not automatically make it a support now, just because it broke through this resistance. If you buy right here, you're going to get screwed in the short term, for at least a week, you're going to be going down. And this could have just as easily went back in this range, and you would have lost a lot of money. You can't just anticipate that it's going to create a support. It has to actually break through and create this level. You have to get those taps on that. You have to create that base, as I call it, so you can get that launch pad up, right? So don't buy and sell those breakouts or those breakdowns immediately. You might win in the short term, but in the long term, if you hold it, it's not good for you. And then don't buy too close to the level. What I mean by this is don't focus on that one line. It could be a few percentage points higher, a few percentage points lower. It's not an exact science. It's an art. And now we have some rules for this, before we actually jump into some live trading examples. I'm going to show you examples of how the market treated this strategy just in the past few days, actually. I'm going to show you some examples of how I traded this personally. All right, so rules. Highest time frame. We already went over this. We already touched on it. Focus on the higher time frame too. See if the higher time frame agrees with what is going on the lower time frame, because otherwise you could get really screwed. Number 2, always have a plan. Don't just buy it and say you're going to figure it out later. Actually focus on it now. You actually have to, before you buy it, you have to create a mental plan or write it down too. That's what I do. I have a plan every single time I buy. It's like a flow chart. You have to create that for yourself because everybody's is going to be different. Make sure you just don't go in blind, Be a robot. This is one of the biggest things. If you've had a bad day, if you've sort of been emotional lately, don't trade, because if you're emotional, that's going to seep into your trading. You're going to lose a lot of money. If you're going to buy emotionally, for example, let's say you had a bad day at school, bad day at work, and you get home and you just want to make some money, you're desperate for that dopamine fix, don't trade, because you're going to end up losing money, making everything worse. You're just in a spiral, You have to be a robot. Just focus on the rules. It's black and it's white. Does it follow the rule? Good. Buy. If it doesn't, sell it. Or just don't touch it. You don't want to touch that. All right, number 4, play the trend. I think number 4 and 5 really go hand in hand over here. Play the trend and the market isn't your friend. It rhymed. Playing the trend, I mean, you're not playing the market. The market is playing you. All right, the market is infinitely bigger than you are. You're just living in the market's world. If the market decides to be concave up, if it starts to move up and start creating higher highs, bullish sentiment, good. Trade it that way. If it starts to flip the other way, take short positions. Start selling it. You can't just make up your own mind like, okay, today I want to be buying here. I think we want to be moving up. No, it's whatever the market decides, and you have to go along with the flow. And then this one, the market isn't your friend. The market isn't there to make you any money. The market will, in the end, almost always win. Right? It's not there to make sure you have a good day and you make a lot of money. It's not going to give you easy setups. You actually have to work for them. And that's why you can't force them either. Let's say you have 5 rules and 4 of them meet, the 5th one doesn't meet. That's not a trade you want to take. You want to look for better opportunities. Don't force the trades because the market isn't going to give you them for free. Not your friend. And then this last one I didn't have space, so I just included up here, is volume. If you see the market pumping or going down on low volume, that usually means that it's not going to actually stay. It's not going to actually move up to the higher level. It's not going to actually be consistent. You're probably just going to end up losing a little bit of money. All right, so make sure that the moves you take most of the time have to be on high volume. If you plan on holding it for a while, the volume must be there, right? So those are just a few of the rules that I personally use. I'm going to make a separate video on all the rules I have. I have like a document with pages and pages and pages of rules because this is a very complex game. Otherwise, everybody would be doing it, right? But I'll make a separate video on that, if you want to DM me. All right, let's look at some actual examples. Some live examples of how we would have traded this recently. Set this. All right, so this is IGN. Now, IGN is another cryptocurrency. Now, don't worry about that. You could use this method for anything. So we're gonna zoom out and we're gonna go on the daily chart right here. Actually, no, we're gonna go on the 6 hour. And we're gonna see, all right, where are our supports and where are our resistances, right? So these ones are quite clear. One of your resistance levels will be perfect, right there. Support, clear as day, right there. It doesn't get much clearer than that. Are there micro ones in the middle? Yes, but that's more advanced. We'll get on that separate video. Just focus on the big ones for now. Resistance, support. Let's turn the EMAs back on. We have the 11, 21, 31. EMA, estimated moving average. All right, so there are smaller ones here. The reason I don't want to get into them at this point is because it just becomes more complicated. Why would you overcomplicate it? If we were to draw it, it would be right around here. So, let's say you're right here, and you don't see any of this. You don't know what's going on to the right of this. You don't know that it's going to move up on this resistance level. You're just right here. You just have this resistance, resistance slash support and support. At this point, this would be resistance too. We see it moving. We see it moving. Oh, so now we're paying attention at this point. Boom, right here. This is where my interest would have really peaked. Why? Because we see on the corner over here, we don't have extraordinary low volume. Don't worry, I'll move back. But on this bar right here on the 17th, we don't have extraordinary low volume because the blue line is the average volume and the bars are the volume for that day. We don't have low volume on that day at all. So I'm thinking, okay, there's decent volume. We're at a support level because we went and we flipped it, and we're on the EMAs. We're hitting 3 of our biggest goals right here. We're hitting 3 of our biggest signs. This is a buy all day, every day. And I would have put a little, buys right there. I'm taking that. Boom. We absolutely rip. Now, in a normal scenario, I would have sold at this resistance, but it moved up so high, so fast that I just let it run. And we see that it gets hyper-extended. Like, really hyper-extended. Let me move the 4 hour, actually. It's a little bit easier. All right. We get really, really hyperextended, right? So right around here, you have this fat lard ball right here. And this is just a sign saying, sell me, please, for the love of God, sell me. The 21's all the way over here at 232, and we're up here at 275, without a care in the world. I would have sold this a little bit early, actually, on this bar, because, I'm not trying to catch the peaks. I'm not trying to catch the absolute buys. I'm trying to sell in, in the neighborhood of that. So, I would have likely caught the sell roughly right here. I'm not going to go and pretend I'm like a magic wizard and would have caught this exact top. Because, once it wicks down, I would have noticed, all right, they're selling pressure, selling resistance. That's not something I want to touch. I've already made a lot of money. And boom. You buy it right here, 36%, 40%, depending on where you bought it on the top, where you would have sold it over here. Easy buy, and this is just over the course of maybe, let's say you bought it roughly right around here in the morning, sold it over here, day and a half, you're making 40%. You put in $100, you get 140 back. It's not a magic, it's just the way this works. These are clear, easy setups that I'm going to be taking every single day. Now, before we actually bought this big move up, there was a smaller one, Just want to quickly touch on that before we move on. I got my keyboard, bro. So, right here, we're moving. We get this retest. Now, we didn't see this before because I left it on the 6 hour by accident. But on the 4 hour, we have this retest. We have this support level right here. I don't know if you guys see that, but we have that tap, 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 flip, support. You would have hit a quick buy right there. Smaller, of course, because it's not as compelling. And we have strong volume too. Sweet as sugar, take that buy. It gets overextended over here. Boom, take that sell. You would have sold it roughly right around here. You're not catching that absolute peak. Boom, this is an easy, 20% I'm assuming? Buy it right there, sell right there. Close to it, 17%. You make almost 20% here, almost 40% here. Over the course of a week, that's like you put in 100, you get back 170, 180 if you trade this right. If you just have multiple of these setups going on, you could just be making a living off this. It's quite simple, actually. All right, so we come here. Now, we go back into this. Now, this one is even stronger because we have high volume. We're on the EMAs right here. We have this support level, oh my God. We've tapped it. We see that sellers bought it all the way back down here. Buyers pushed it back up, not once, but twice. I'm taking this trade all day, every day, Boom. We get that beautiful buy. It moves up. It's moving up, over the course of a day goes by. Boom. Once I see this huge candle, I'm like, hold up. Wait a minute, We see this huge gap open up right after this bar. Now, I would have sold it on this bar higher up. I wouldn't have waited for this because this could have easily shot right back down, and I don't want to deflate all my losses. I don't want to let any of that go. So, right here, we see this huge gap form, this gigantic ball. I'm like, okay, I'm not touching that anymore. I would have taken a quick sell right there. Take this. We're actually going to make these all red, just so you know you could follow. My apologies. All right. So those are red, buy, sell, buy, sell. What happened to you? Buy, sell. It's an easy method. You would have made 20% here, 40% here, 20% here. You're doubling your money almost, You have to follow these rules though. And I hope this video helped. I'm going to be making another video soon about all my rules. If you did like the content and you did find this helpful, please consider subscribing. It helps the channel grow. I appreciate everybody's support, and yeah, I'll catch you guys in the next one.